Is the American consumer thriving? Spencer Jakab of the Head of the Tape column here at the Wall Street Journal says yes. But don't hold your breath. He's not going to be thriving for much longer. Spencer Jakab, this is your second appearance on Main Street.
Exactly.
Does it feel even more exciting?
I don't know if it can get more exciting. I think it's like I peaked last time.
You might have peaked. You might have peaked. Now listen, the American consumer has proven himself to be resilient. Mm-hmm. We've had good but not great numbers coming out of retail companies. You talk about that in your thing, and yet you say, clouds on the horizon. You give the typical kind of, financial journalist, everything may seem okay, but beware kind of thing. Why am I wrong for thinking that the American consumer might have more money than we know?
Look, you would have lost a lot of money in the last several years betting against the American consumer, except for brief stretches, right? Except when things were really looking bad. I mean, Americans can have a
we can
amazing
spend with the
ability.
best of them.
Exactly. Yeah, we're world beaters at that, if nothing else. But look. I'm just looking at the facts. I'm reading all these reports from different retail analysts, and they're slicing and dicing the data. The things that you just wouldn't even think. They're looking at, gas prices, comparing region of the country. They're looking at temperature deviations from the norm and trying to get any kind of an edge.
What does all this analysis tell us?
It's telling me that they're missing the forest from the trees. Like, you read these things they're talking about January and February, right? Hello, we have, Congress still hasn't extended the payroll tax cut. Right, and an emergency unemployment.
Doesn't everybody think that's going to happen?
Everyone thinks it's going to happen, but no one thinks it's going to go on forever.
Right.
It's not going to happen.
So you think there are these pockets of what, in effect, is stimulus spending by the government, right? There are these pockets, and that the government, that the economy is hooked on this. Consumers are hooked. Unemployment benefits, payroll tax cut. Government benefits, food stamps, whatever it is, all that money being pumped into the economy is going to end someday. That's your point, right?
Not necessarily the food stamps, but I mean the payroll tax cut was definitely intended as a temporary goodie for last year. They wanted to extend, and they probably will extend it for the rest of this year. I mean, there's a pretty small chance that, given the drubbing that the Republicans took trying to, attach conditions to it last time, but it's going to end, and it's important.
We have seen, though, pick up in personal income. Last month jumped. So did the savings rate. Now, a lot of people go, but you see, if the savings rate goes up, that's bad for the economy because that means that there won't be money to spend it on things. But it seems that Americans have always been willing to open their wallets, much actually to their own detriment. Is consumer debt picking up as well right now?
The revolving consumer debt has kind of hit a turning point. It had been coming down for quite some time, and now has started to turn the corner. And what you've seen are, people like Ally Financial or people like Ford's lending arm, the car companies, things like that, and also credit card companies being willing to go back to people who were
that's a few years ago, right? All the consumer finance came out of the car companies. That was a source.
Right.
Can consumer finance? Can people spend if house prices do not go up? Let's assume that house prices kind of stay flat for the next few years. Do people feel that in terms of consumer behavior?
See, what you have today, you have mortgage rates that just mathematically, if you talk to anyone, they cannot go much lower. So even if they were to stay at this level, unless people get more equity in their homes, that's a big source of incremental spending, right? And so no, they can't. I mean, it's going to slow down. Just home prices just stabilizing, much less not going up, is going to put a crimp on things. And then if rates do start to edge higher, then that's going to be a big hit.
Final question, Spence. What makes you change your mind? What makes you say, you know what, Evan, you're right. The American consumer, they have more money than even I thought.
But there are a lot of moving parts to the economy.
What about stock prices going up? Does that help? Must help.
The wealth effect helps, of course, yeah, and that's helped recently. But home equity is a lot bigger than the stock market in terms of affecting people's behavior. Now, if you have unemployment get down to, let's say, you're really surprised on the upside. You had a surprise on Friday. If you get down to the low 7s by the end of this year, you say, okay, well, you can then you can take away these stimuli, and it's going to have an impact.
Right.
It definitely will have an impact if you take, especially the Bush tax cuts expiring. That's a much bigger number, more of which is saved. But all those three things happening at once is going to have an impact, but it's not going to be as severe as what I'm talking about.